Welcome back to Ansibles, everyone. I'm going to go over exactly why the market has been selling off and exactly which levels we're trying to hold above to avoid a possible continuation sell-off and exactly which levels we want to break above to have better market conditions. And the only thing I ask in return for this is you guys smash that like button and hit subscribe if you guys want to see more chart updates on potential breakouts later in the next day that we mentioned throughout the week. So let's jump into this one. So I'm going to go over the S&P 500 with you guys. This is the 500 largest stocks in the stock market. This represents most of the market, and I want to make sure we do go over this so you guys can see exactly how bad the market does look here on the charts. A lot of people have a lot of rumors on what might happen. A lot of people guessing based on what they think the economy looks like, and I want to make sure we do cover the market on the charts here so you guys can see exactly what's really happening here. So you guys can see here, I'm going to back up so you guys can see what's been going on here. You guys can see we had a large spike down at this point right here. Again, that was when Biden mentioned that we might have a 100% increase in capital gains, which would make us pay twice as much on taxes as traders. And as you guys can see, we continue to rally. We continue to break new highs. Now we had this spike down right here. A lot of people wondering if we're going to possibly crash at this point. A lot of people thinking that we're going to possibly break down below the levels that we had when Biden did mention that 100% increase in capital gains. But sure enough, we did bounce back and we did not drop down to our possible crash point that we did mention. And as you guys can see, we are continuing to rally since then. And as you guys can see, we had a large spike down recently. We came down to our warning sign that we mentioned. And as you guys can see, we bounced off of that, bouncing back up and continuing to break new highs. But however, I want to mention something specific about the RSI. Again, this is the relative strength index. I did mention this on Tuesday when I went over a market update as well, but I want to make sure we do cover the RSI so you guys can see when stocks are typically cooling down. Again, this is not financial advice. This is only one I want to show you guys so you guys can see exactly when stocks are starting to cool down. As you guys can see here on the RSI, when something is above the 70 RSI, it's usually overbought, and when something's under the 30 RSI, something's usually oversold. But when you have two peaks on the top of the 70 RSI here, and you guys can see that we have a trend going down here, and then on the opposite side, you guys can see the price action is actually going up, showing us that the strength of this stock is cooling down, as you guys can see on the downtrend. And you guys can see we are a little overextended, showing us that we are breaking into new highs, even though the RSI is showing us that we are cooling down. So as you guys can see, we might have a possible cool down, possibly another retest here around this next week level that we see here at 4,286, or possibly even a cool down here where we saw previously when we did drop down to this warning side at 4,227. But in my opinion, to even have a possible market crash, a lot of people were talking about a market crash at this point. If we drop all the way down to this level here at 4,135 and we test this level, then we could have a continuation sell-off. But however, we did bounce back from that previously. We had way worse news back then, in my opinion. And again, we do have the new variant that has been causing a lot of issues in the United States and every other country. So again, that could possibly ruin the chart for us and possibly make a market crash. And the only reason why the market would come down that far, in my opinion, would not be because of inflation. Again, a lot of people were talking about inflation at these levels. Even previously at these levels, when they were talking about a market crash, they said inflation was the big issue here. And sure enough, we have been breaking into new highs. So again, a lot of people are talking about what might happen. Let's stick to the charts. I want to make sure we always stick to these technicals, because if you guys are watching these technicals, a lot of times when you guys are listening to the news, you'll notice that every time you watch what's really happening here in the charts, a lot of times news comes out based on how these charts actually look. So a lot of times people are reacting after these charts have played out. And if you guys want to see what's really going on before people are thinking what they're thinking, you guys can see here that the 20 MA, the 20-day moving average, still is above the 50-day moving, showing us that we are still consolidating here. So again, we're still more bullish than bearish at this point because we have the 20 MA holding above the 50. But however, if we do cross back down below the 50 MA after this large spike down that we did have at this warning sign, then we could have a possible continuation sell-off dropping below this level because we do have bearish divergence here. And as you guys can see, we have been getting a lot more sell volume recently in the S&P 500, so that could show us that we could be looking for a cool down. But again, in my opinion, as far as the market crash, I'm not too worried. And as far as intraday, I'm not too worried as well. Again, we could just watch the market, let it bounce, make plays off of what volume is coming through. And also, in my opinion, for swing trades, I definitely would be careful. Again, the RSI shows us the last 14 days within the S&P 500's trading period of all the movement up and down, showing us the relative strength of this stock, showing us that we are on a possible cool down. So as far as swing trades, I definitely will be holding back a little bit for swing trades. But as far as long plays, I love a lot of long plays right now. Again, a lot of travel and retail stocks are at amazing discounts in my opinion. I like DKNG as a long play as well. Another one that I added recently, it was a couple weeks ago, which actually reached $100, was AMD. I like that one as a long play. I've always been talking about that one as well. We have multiple long plays that are amazing long plays, in my opinion, at these prices, as we could be having a cool down as well. So in my opinion, I would be entering into these pretty lightly. expecting more of a cool down, possibly even a market crash if something crazy were to happen. So I definitely would keep more cash to make sure that we do not have a possible market crash. But however, we do have many discounts in multiple sectors that could have amazing long plays in my opinion. But again, the S&P 500, definitely something to watch out for on these bearish divergence, as we did mention on Tuesday. And again, we have been cooling down. You guys can see we came back up. We got rejected at new highs, and we are coming back down. We're going to see if the 20 MA does hold up here and curls back up and gives us another rally. Again, the S&P 500 has been continuously breaking out, even though we have been having a ton of fear in the market. But however, as you guys can see, when we are overextended, we do have somewhat of a cool down typically, and that is what a lot of people are fearful of, is a possible market cool down, coming down all the way to this possible market crash, and possibly a lot of people losing interest in the recovery that a lot of people have been expecting to happen. But however, the S&P 500 definitely on the watch, as we do need to make sure we do hold these levels at 4,346 going into next week. But however, if we do have a cool down, we come down to hit these next week's levels here at 4,286, then we will be looking to see if we can bounce off of this level to have more of a bullish momentum state and possibly get oversold and create bullish divergence, which is the opposite. The RSI actually oversold under the 30 RSI, showing us a confirmation on a possible reversal. So that's what we will be looking out for to get more bullish momentum back into the market, in my opinion. But however, these levels here we do need to hold to make sure we do avoid a possible market crash coming down to these levels here at 4,135. So the market definitely on the watch this week, as we could have a possible cool down. But I do want to mention again, if you guys want to see all our penny stock breakout alerts throughout the day, go to instabulls.com in the description below. And you guys will never miss a penny stock breakout alert throughout the day again. And everybody that has been supporting the channel and everybody that has been in the comment section, I appreciate every one of you guys as always. Much love to you guys. And if you guys do like this video, it does help other people find it, and it does help the channel grow. And I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.